Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Rupee, I would say dollar to rupee is trading above 81 now, and it's been at the all-time high, or rupee at trading at all-time low against the dollar. The two sectors which come to your mind is the IT and pharma. Being the export oriented, these two sectors benefit a lot against the rupee depreciation. Now, dollar have been gaining a strong positive outcome from its global peers. Look at the dollar index trading at around 111, 112. And if you remember last week, I had done a video onto the dollar index when it was trading around 113, 13 and a half. The structure on dollar index seems positive over there, which means that dollar will continue to be a stronger against the global currencies. Though dollar index comprises of euro, pound, yen, Swiss franc, Canadian dollar, but it is not included as a rupee. But the impact of rising dollar index put pressures on most of the global currencies and rupee as well. So starting with the pharma over here, why I'm think that the pharma would be the best sector into the last quarter, which is the October, November, December of 2022, or it may prolong the bullish momentum in 2023 first quarter as well. Not only just that the dollar is appreciating or rupee is depreciating, which will benefit this sector, but there are some of the technical stuffs or the charts which are indicating that the structure seems exciting for pharma index. If you remember 2020, when the markets was tumbling, two sectors stood out. One was the pharma, and no brainer, it's been pandemic. The sector which will benefit the most was the healthcare and pharma. Hospitals were full. Pharma companies were looking for or hunting for the drug of coronavirus, and most of the companies into the Indian space as well gained the strong momentum. And pharma was one of the index which outperformed in 2020. The index was up, I guess, around 57% in 2020, when most of the index most of the sector were struggling even into the V-shaped recovery. 2021, it's lost its charm. IT index and as well as pharma continue to drag onto the lower side. But 2022, where US has been tumbling, most of the investments have been into the defensive space, and pharma stands out to be one of the most defensive sector when it comes to the investment into the bad times. Well, is it true into the Indian space as well? If you remember, right from 2013, 2012, most of the stocks where defensive has been invested. Pharma was one of the most outperforming between 2013, 2014, and 15. Since then, it's lost its momentum until 2018, 2019. Pharma was struggling to come back. 2020 was, I would say, first kick in for the pharma space, and probably I believe back again in 2022, where we are into the October. I think the momentum could resume into the pharma space. So let's look at the charts first and start with the top-down approach. So starting with the monthly chart over here. So if you look at the monthly chart, the blue line is the average over here, which is placed at around 11,745. And if you look at the structure, every time the prices dip around the 50 monthly exponential moving average, they tend to take support, and we have seen this consistently right from, even if you look at the 2006, the structure has been very, very important when, and it was the only once into the pandemic time when it has been breached by a big margin against the 50 monthly exponential moving average. So but most of the time it has been an aggressive buying opportunity when it comes to. Similarly, back in 2022, after a rally in 2020, we saw this retest happening again in 2022, and look at the support zone which being holding. And if you remember, Look at the levels over here at August, I would say the June, July, August, September, where markets were stumbling towards 15,182, came back very, very strongly towards 18,000. This pharma index held on to their support zone over here. Even in the volatile times, this index was holding its long-term average. Now, the momentum is shifting back onto the positive side after testing the long-term average. It seems that the structure is very, very bullish and bulls are trying to hold. As an investor, this is the best bargain buying levels I would look at into the pharma index. If I look at, as I said, the top down approach, let's look at the weekly chart over here. So if I just look at the second chart over here, again the weekly 50 exponential moving average. Whenever the weekly exponential moving average, 50 exponential moving average is been tested, we see a consolidation zone then a momentum. Again, we saw back in 2020 when the 50 days average was being retested, prices were trading lower. We saw the downfall when the positive crossover happened, the price closing above the 50 exponential weekly exponential moving average, the rally was seen. Now again back into the 2022, where most of the year, the last 9 months have been below the 50 weekly exponential moving average. This is the first time or the first week, I would say, though the closing will be tomorrow, which is the Friday. Look at the structure. It is coming back very, very strongly above the 50 weekly exponential moving. So with the 50 monthly exponential taking support, 50 weekly exponential moving average coming back very, very strongly, the prices are trending above it. We may close above the average this week, which means that the trend reversal is happening on weekly scale as well. And if I go by with the history over here, just look at this trend line, the green lines over here. The prices breached the falling trend line in 2020, and prices moved about the 50 weekly exponential. We saw a stellar rally. Back now again in 2022, if you look at the green trend line, the price is breaking out of this green trend line, which is the resistance line, and again moving above its 50 weekly exponential moving average is a sign of bullish momentum. So here the space indicates that the structure seems very, very exciting for bulls as the prices are just breaking out. And whenever this prices are breaking out or the fresh momentum has happened, it has given an superb return on the higher side. So keep a watch on this scale over here. If I just look at the another chart, again this is a weekly chart, and just zooming out onto the 2022. Look at the right from the October 2021, the structure seems to be lower high, lower low structure, which means that it is a bearish structure as per the Dow theory. Now, if you look at the black lines, the highs are going lower and lower, as well as even the lows are going lower and lower, which means that the bearish structure is intact into the pharma space. And last 1 year, which is nearly 12 months, this index has been trending negative. Now, for the first time, if you look at this green horizontal trend line, first time it has breached the previous highs over here. And if you look at the blue line, as I said, the horizontal trend line breakout or the falling trend line breakout happening onto the structure over here indicates the fresh momentum is building up. Now, with the lower high, lower low structure negated right now when the previous high been taken out, plus the following trend line breakout, the blue line over here indicates that the structure seems very, very exciting over here for bulls. Now the fresh breakout could be a retest at 13,000 levels and a momentum back towards the higher levels. And if I just look at the whole structure over here, again the previous high been placed at around somewhere around 14,000 levels, and that's what the immediate targets which I'm expecting onto the short or the short-term targets which I'm expecting onto the pharma index, which is if at 13,200, 13,250. If I just look at the 700, 750 points, it sums up to around 5 to 6%. So as a short term, I'm looking for a 5-6% momentum. But if the momentum continues or we see the faster rally, it may even surpass the all-time high, which is above 15,000 levels. So keep a watch on this chart. Any retest, excellent opportunity to go long. And if I just look at the broader markets, if I look at the next chart over here, I am comparing the pharma index with the Nifty 500 or CNX 500. Why I'm taking Nifty 500 and not why not Nifty 50? If I just look at the component of pharma or healthcare space, it's somewhere around 3.5% sort of constituent into the Nifty 50. It will not make much difference, but looking at the broader and if you remember, if you look at the constituents of Nifty Pharma, there are somewhere around 20 stocks into the pharma index, and just a 3%, 3.5% to the Nifty 50, it won't make a better comparison. So that's the reason I've taken Nifty 50 over Nifty 500 or CNX 500 over here, just to look at the broader market comparison against the Nifty Pharma. Now, if you look at the Pharma index to CNX 500, which is Nifty 500, the ratio chart over here, when the the ratio is falling, it means that 500 Nifty 500 is outperform against the pharma space, and when the ratio goes higher, it means that pharma index is outperforming against the Nifty 500, the broader market. Look at the structure right in 2020 when the lows were formed or onto the ratio chart. We are revisiting that levels again, and the momentum in last couple of weeks is seems to be a bullish momentum, which means that the previous low will be acting as a support zone over here. So if you look at the red line over here on the horizontal trend line, it indicates that the support is being acting and we are witnessing a reversal happening onto the pharma space over here. How long it can go, or what is the strength into the momentum? So to measure a strength, there is an indicator called RSI, and we'll plot this RSI onto this pharma index to CNX 500. So look at the chart over here. If you look at the same chart, the horizontal trend line support with the RSI into the lower panel, again, the look at the RSI, it's trending above 50 now. Taking the previous lows as a support over here, so it's turning back right from the 30 level, which means that the oversold zone. And generally when the trend is very faster from 30 to 50, generally 30-35 act as a major demand zone. Look at the previous swing lows over here, it's been held, the lows have been higher on the RSI as well. So I believe the strength is still there into this ratio chart, which means that it indicates that pharma may outperform against the broader market. And looking at the strength, there could be a possibility that there could be a fast and furious rally coming into the pharma space against the broader markets. So what are the stocks which can lead pharma index higher? If I just look at against comparing it with the Nifty 500. So let's look at the first the constituents. What are the constituents over here? So with the weightages over here, Sun Pharma holds the highest with around 24% weight, Cipla around 12.5% weight, Dr. Reddy nearly 12% weights, Divis Lab around 11.5% weights, Laurus Lab 4.84 or nearly 5%. So and then the list continues with the 20 stocks over here. And if I just look at the top four, it nearly constitutes around 60% of the weight. So if in case the needle has to be moved for pharma space, these four stocks have to outperform or rally to take the pharma index higher. So let's look at the first four stocks where the 60% weightage is in and how they are performing against the pharma index. So let's start with the highest with the 24% and go on to the Sun Pharma over here. So first chart, if you look at onto the stock side, this is Sun Pharma to pharma index over here. And if you look at the structure right into 2020, and it was, if you go back onto the 2018, 2019, 2020, Sun Pharma is one of the underperformer into the pharma space, and right from 2014 2015 this has been underperforming. So look at the structure, right, the red line. If you look at right from 2014 2015, there has been lower high lower low structure on this ratio chart. Back in 2021, or I would say end of 2021, it broke out onto the positive side, which means that the Sun Pharma is coming back very strongly into the pharma space. And look at the rally, 24% weightage, which means that if the Sun Pharma continues to trend higher, it will lead the pharma index onto the higher side, and the rest may follow. The momentum right from the post breakout in end of 2021, the Sun Pharma is one of the outperforming stock into the CNX Pharma. So it may continue to lead onto the pharma index over here. So we have to watch this ratio chart. Once that the high is taken out, The momentum may be fast and furious for Sun Pharma to accelerate pharma index onto the higher level. Second, with the nearly 12% weightage, the Cipla over here. So look at the Cipla right from 2012. It was the ratio was consolidating, resisting at the higher levels. If you look at this red line over here, and back in 2022 it broke out, which means that Cipla has been outperforming against the pharma index over here, and being nearly 12% weightage, 24% weightage on Sun Pharma, 12% weightage on Cipla, it sums up to around 36.5% weights. Both these stocks are gaining a strong momentum into the pharma space, and if they continue to rally another 8-10% or 15%, the pharma index would take the prices to the higher levels. And if we have already seen the breaking out of their weekly scales, the trend line breakout, the Dow theory has been changing, the lower high low low structure has been taken out. Now if these two stock rally, we may see a positive momentum coming. Third stock with around probably 11% weights, Dr. Reddy. If I look at the Dr. Reddy, the structure doesn't seem exciting for me comparing with the pharma space over here. Now, if you look at, it's been resisting at the previous highs over here. The recent right from 2020 and 2021, the lower high lower structure has been placed onto the ratio chart over here. So Dr. Reddy doesn't excites much, or I wouldn't think that it may take a lead into the pharma space to head higher. The next one, the Divi's Lab. If I just look at, again, it has been trending higher, right? Look at the breakout happening from 2007, 2008. Broke out nearly happened in 2018, 19, and still continues much higher. Again, the retest has been happening. If you look at the upper red line, the retest has been happening onto the higher side. So probably we may see Divi's Lab also continuing its bullish momentum and may lead pharma index onto the higher side. So just summing up, pharma, I believe, is the sector where you should look for next 2 to 3 months as a short-term bet. Probably we may see higher levels into the pharma index as well if the momentum is fast and furious and may prolong towards the first quarter of 2023. The initial levels which I am looking is around 14,000, 14,200, and if the momentum is fast and furious, we may even see 15,000 levels surpassing into the pharma index. And the weekly scale indicates that the breakout is very stronger. The ratio chart of pharma index with the broader market, which is Nifty 500, indicates that the trend may see a reversal coming into the pharma space, and it may outperform against the broader markets as well. So keep watch on to the pharma and stay invested over here. I believe defensive is the theme one should look at, and even if you look at the global market, defensive is the theme which is playing out in US markets as well, and I believe that may happen into the Indian markets as well. So next 1 to 2 quarters, defensive would be this theme one should look at as an investors. Signing off, and have a profitable week.